We're on express elevator to hell. Going down.
2, 1, mark.
It's game over, guys. It's Brendan from Market Makers. Guys, the TA is playing out beautifully. We identified the quadrants for this face ripper rally, this bear market rally that had a lot of perma bulls in the equity space calling a bottom to go up. Now it's just a retracement for the day. Does it make a trend? No, not yet. But it was an expected area of retracement. I do think it's going to continue. We're going to look at the crypto space. We're going to look at Bitcoin, Ethereum. We're going to see if our charts are holding up or if they're starting to be affected by this market downturn. Okay, we're going to do all that in this video. Like and subscribe to this channel if you have not done so already. It will boost us and the algorithm. Are you guys ready? Are you ready?
I'm ready, man. Ready to get it on.
Then let's get into the show, everybody. All right, guys. So first off, if you want to help support this channel, if you like this program, please do check out our two sponsors, SimpleFX, where you can trade these equities, trade commodities. This is a great market to be doing this. Trade Forex. Everything is there up to a $5,000 bonus with our link. You have to use our link in the video description. I'm the only person that has this deal with SimpleFX. So definitely check them out, guys. Tutorial guide as well is in the video description. And we have BITGET. Trade the cryptos with BITGET, guys. Help support our room, help support our channel. Definitely appreciate it. Our Telegram, we have a special deal going. Details in the video description, and the join button underneath this video will get you on our Discord with the professional traders and 11,000 people. Got 11,000 people there in a year. Started this channel June of 2021. Thank you, everybody, for your support. Let's go ahead and dive into this, guys. So what happened here? We pumped up to the 1618 as predicted, hit our 200, got this quadrant of resistance, got our first retracement, which I think will come back up for a back test, give us a double top like we like to do in the indices over and over again. You're trading at 1978. Man, that's the year I was born. See, the Russell's throwing all this numerology at me. Got the year I graduated high school for the resistance in 97, the year I was born when I'm making this video. So you got to pay attention to this stuff, right? And we're down 2.23%, and we shall see if this starts to make a trend. Let's go ahead and look at the Dow. The Dow also pumped up above the 200. Looking at the daily time frame, for those of you that don't know why, because these were daily patterns. These are my chameleon patterns that track to the 1618 here, and daily patterns have a lot of strength, okay? So when I'm executing trades, I'll go into the 8-hour, 4-hour, look at those smaller time frames, but here I'm giving you these bigger picture movements. The Dow as well, I expect it to have some volatility up here in the range. Remember, you're going to make some type of distribution if you don't just come up right into a double top and fall down. So we're going to see the market rallies cool off as people come to the realization, hey, Fed's still raising rates. Fed's doing quantitative tightening to the tune of $100 billion a month come September. What is that going to do for the market? It's not going to be bullish. Remember, you got JP Morgan guys out there on the business news putting out articles as well talking about this is a bullish environment, 10 reasons why the bull market's back on. And then you got Jamie Dimon on the low talking to wealthy clients, telling them privately there's at least a 50% chance or better that we're going into a hard recession or something worse. A hard recession or something worse. What would that be? That would be a depression. So that's the VIP service, guys. I try to give you guys the VIP service on this channel every day. Let's go ahead and jump over to the S&P. We're going to get to crypto, guys. 1 second. So looking at the S&P, same thing. We wicked the 200, and now we're retracing. We fell below the 1618 at 4271. This is what I love about TA, guys. And I'm not bragging about this TA. I basically mimic the great traders of old. The only thing I do differently is add fibs to some of this, right? But when I was watching this, since June 16th or whenever, June 17th, we had this rally. People are giving, oh, we're going to 4,800. No, we're going to 3,500, 3,600. We can't go, I'm sorry, 44,000, 4,200. We can't get up to 4,271. I've had this fib basically since June 17th. And we got to 42, what did we get to here? We got to 43.25. I had us at 42.71. $50 difference, okay? I mean, and I've had it for over a month. This is the beauty of learning how to trade the markets, guys, and you can do that in our room. So this fib projections and all these markets are holding up, and again, we can get overspill. We didn't get it here. We got rejected pretty hard, but I expect a retest. This is how you get double tops, okay? I expect a retest, and if it does break through, I still expect a double top or a distribution box to be made to turn back down. And I'm looking for a retracement at least down to the 618 and all these patterns. We'll talk about it because we do this show every day. We'll talk about it as we start to get more dissension. But here on the S&P, you're looking at 39.51. And if we lose the 618, we're coming back down to basically retest our June lows and all of these indices. NASDAQ, guys, the NASDAQ outperformed. It did not get to its 200. Got above the 233, but the NASDAQ does this all the time. Double top, splits the moving averages, the long-term moving averages in a primary downtrend. I don't use moving averages generally when I trade, but when you're in a trending market like this isn't a bottom, guys. This is a primary downtrend with a big rally. Remember, NASDAQ.com blow up. 7 times over a 2-year period, got over a 20% rally. This is just another big bear market rally. Making your shape here, may come back up to test this, may get a head and shoulders out of it, or just may make a double top. But eventually this will peter out. Low volume divergent rallies on all these indices. They were bound to make a top. It's all about identifying the quadrant, throwing that trade up and executing it, right? Stocks 50, this is a European market, 50 biggest companies. And what you can see here, again, we got up to the 233 and we're getting rejected. This actually off of its little double bottom here got all the way up to the 2618, just above the 45 and just fell back below the 45. Same thing, guys, I expect a retest, potential double top to be made. Let's go ahead and check out Bitcoin. Bitcoin on the weekly. Bitcoin on the weekly still looks the exact same, and you're coming back down the base. Basically, it looks like on that 233 beneath, or the 200 just beneath you, you're wedged between the 233 on the weekly and the 200, and you've been stuck there for 2 weeks, and you're on top of Wyckoff. You're still in a bullish structure here, guys, in the weekly. But remember, the ceiling for me, you have this structure here of the ceiling right at 28K, depending where you actually break up to. It's an ascending line. And then on the daily time frame, we can see that a little bit clearer. We have the 1618 at 29K, also very important to watch. And if you were able to get super bullish, but remember, I've been saying this for a couple days now, Bitcoin is on a clock, guys. The markets, if they do start to establish a downtrend or a sideways trend, Bitcoin can be okay in a sideways trend. It could be okay in a downtrend. A lot of Bitcoin people will be very happy because they'll be like, look, it's detached from the market. It's doing its own thing now. I don't think, again, this is a money game, right? You always follow the money. The money is flowing in all these different markets. It's in Bitcoin as well. If those markets do start to turn down hard, Bitcoin could easily just come up to whatever level and then fail, okay? So we want to get this pattern. This pattern is still intact for those of you that are wondering. Volatility compression pattern. Again, this is a play on O'Neill's cup and handle. You have your volatility waves here, tightening volatility, the tightest it's been since the beginning of the bull run. Your trend is intact with higher highs throughout the trend here and higher lows. Okay, this is a bullish pattern. Now, it matters a lot what happens right here. If you break this previous wave, then you're going sideways and you could easily be building a distribution box which can turn down, okay, in Wyckoff. So we want to watch this. But if we go ahead and measure these waves really quickly, let's just get this compression, see that everything's still intact, 14.5. Get the second wave here. You're at 9.3. Again, that's contraction. That's good. And this third wave here is forming. We want to see where this holds up. But we want to keep this above that 9.3. Okay, so 7, 8, even down to 9. But you don't want to lose these lows in this previous wave structure, or you're going sideways. Does that mean necessarily that it will fail? No, but again, what is TA in trade setups, guys? It's all about probabilities, right? Nothing is ever certain when you are trading. You can have 10 fantastic trades and they still can get blown out. It doesn't matter. It matters what the people in the marketplace want to do with a particular asset at a particular time. So let's look at our volatility again here and just check it. because this is still, still super tight, still above your median line. Again, still a bullish trend. If we can hold our support, try to move up. That 45 angle is, or the trend line from the top here is just above us at 27. You got 29K, 27, 27.5, and you got that 32.5 for the long-term moving averages. Want to see this move up, guys. I really want to see this move up. And again, to be perfectly clear for new people, this is a move up to resistance and then a move down. I think the market is going to move down with the equities market, okay? Looking at the 8 hour, you can still see the trend is intact. However, you're still getting rejected by that 233. Looking at the 4 hour, you are using the 150 as support. The 200, 233 are beneath you, but this is good. You're still holding your support, keeping your trend alive, okay? Looking at Ethereum, we've talked about this the last couple of videos. I expected a pullback here. You want to try to hold this top of Wyckoff, and basically you're going to get one of two patterns here, guys. You're going to get your cup pattern, your pivot, right? You're going to get your pivot out so you can roll up, come over, get your cup, get some explosive volume, momentum, and get your cup pattern. But if you fail at the cup, what do you get, guys? You come down, you come back up, and you come back down, and you make a double top. So you want to watch that. These are the two most common shapes you're going to get on top of a Wyckoff accumulation range, is a cup or a failed cup, which becomes a double top, okay? So you want to look out for that. And let's go ahead and check out the DXY real quick, because the DXY is doing what we'd said it would do, right? So I told you we're coming up here in Wyckoff. I expect this to continue to rise. Again, I expect this to rise because the dollar is being strengthened by the Fed, okay? Now you're at the top of Wyckoff, putting in an up thrust. You're trading at 106.797. We've done this before, but let's go ahead and get that upward projection again, see where we can get to here. The golden ratio is at 107.679. I think you're coming up here, guys. You got resistance at 107.300, but I wouldn't be surprised if you accumulate here or get on top of this range, get rejected by this resistance and base, right? Get your base up here, get your Livermore pivot, and come up. The dollar's got more to rise. Remember, in the dot-com bust, it got all the way up to $1.20. Now, the dollar is fiat. Fiat is garbage. But again, other countries have much worse garbage than we do. Ask any of your friends, if you have friends or family in places like Argentina, 71% inflation, okay? So a lot of inflows are still coming into the dollar. So keep that in mind. Jumping over to WTI, guys, this is a very bearish trend, very well established here, as you can see. Got a lot going on here, but we've spiked up to 130. If you guys understand market cycles, commodities run up and they dump, okay? And it's a sign of a market cycle recession, okay? So you have this... Oil traders are pricing in recession, but this is a very complex organism to trade, oil. A lot of people just professionally trade oil. That's all you do, because you have to look at the macro and the micro. You got supply cuts, supply shortages around the world. You have winter is coming. That could give a catalyst for oil. But in the meantime, you got the strategic reserve being dumped on the marketplace. You have economies contracting, they're therefore using less energy. You also have the individual consumer perhaps choosing not to drive as much, perhaps not taking out their recreational vehicles, their boats, their ATVs as much, because everything's expensive. And in the meantime, you're in a permanent downtrend since basically, what day is this? June 9th. You've been in a downtrend here. You see this? So you lost your 300. You're still hugging this 45. Like I said yesterday, guys, you could come down to 80 bucks. I mean, you're at 87 right now. You could come down to 80 bucks, maybe hopefully hold this, and then come back up. I do think, with the energy crunch, oil could have another move up. But, if the economies get worse faster than basically Europe runs out of gas and runs out of energy, I mean, like I said, this is just something you have to really pay attention to. But I need to see accumulation. This is not accumulation. This is a downtrend, okay? You need to see the market go sideways, build us a Wyckoff accumulation box, something that has steps that we can trade, and then I will look to long it when the time has come. I'm not keen on shorting this because oil's so explosive. One thing happens in the world, one misfired shot, one bit of economic news, this thing can spike up. You get a refinery fire or something, this thing can spike up. So it's just something to always watch. Looking at the gold, guys, let's do the metals real quick. Now, I am a fan of metals. Some people think I am not. I own metals. But just like when the dollar is being strengthened, you are not going to have rises in metals. I know a lot of the metal bulls. Some of them may even agree with a lot of my views on the marketplace, but they are super bullish on metals, but they are too soon. If the dollar is growing in strength, Gold will continue to fall, as will silver. This is why you had that peak up there, okay? And you've just done nothing but been in a permanent downtrend since then. If we get this bounce back up, this may be where I'm looking to short. If we get rejected here at the 618 and start coming back down, because then you got a nice double top here, okay? And that could be your retest down of these lows. So same thing with silver, guys. Again, silver, I told you this is going to be looking to fall apart here. And you're doing the same thing. You're getting a sell-off. You're trading in this what's probably going to be a distribution box here on the daily time frame, getting a down thrust. We'll see if you come back up, make some type of shape, and could potentially look to take care of that with a short as well. As you can see, you are bearish on the money flow. All right, guys, I think this is all you need. Do you need to know anything else? Is there anything else you need to know?
I only need to know one thing: where they are.
Where they are. Guys, I hope you enjoyed this video. Go ahead and smash the like button for me, and I will talk to you guys tomorrow. Have a good one, everybody.
That's it, man. It's game over, man. It's game over.